Hello everyone and happy Friday. Before we share my analysis from these last few days, please remember that neither I nor the SIMETRI team from Crypto Briefing are licensed financial advisors. What we provide is not a personalized investment advice. It is merely our opinions based on our various research and diligence. As always, do your own research before making any decisions about buying or selling crypto.
So let's have a look at the technicals behind Bitcoin at the moment. So 18,100 is the key downtime level that I'm watching. It's the bottom of the range. As well, the monthly pivot point, I said at 20,400, that's the top of the range. The weekly pivot point for me is around 19,600. If we start to hold above there, there's a chance we could test towards 20,000. If we were to get above the monthly pivot, I'd expect to move towards 21,000 and 21,700. Daily price closes below 18,100, and I wouldn't be surprised to see 16,000 very quickly. Moving on to the charts for Bitcoin. So what we're basically seeing here, you can see this small pattern here. It's starting to mimic this larger pattern here, which often happens. And if that plays out in itself, then we're going to probably see a breakdown. But we are at a critical juncture for this head and shoulders pattern, and we're kind of moving to the point where we're either going to see a move up higher, or this pattern is going to completely blow, and then we're going to see a very, very large move lower. Again, so Bitcoin is pretty much poised for its next big move, I would say. And the defining moment is probably going to become between 21,700 and 18,000. So anywhere underneath there, and we're probably going to see a big drop off towards maybe 16 and then 14 and maybe finally 12, something like that. If we have a look at the big numbers on the chart, so all-time high to all-time low, we're kind of in no man's land at the moment because we're beneath a 0.618 and a 0.786. So I think the 0.786 basically, that's an area that the market could go towards. As 14,840 is maybe a final pit stop, but this sequence isn't working. Normally in a strong bull market we see bounces from either the 50% or the 61.8, and that hasn't happened this time, so it's just collapsed through. So there's even more reason to think, well, we could just break this sequence and head down, and then maybe we'll get a recovery. So anybody looking at this from Fibonacci probably going to be frustrated at the moment. Just looking at this kind of squiggle with trend lines here, like the breakout in Bitcoin. So you can see this high there when that was broken, the market hasn't looked back, and you can see it's using this trend line now for support. If we break underneath that trend line, the other most prominent trend line on the monthly time frame is all the way down at 5,000 US dollars. I'm not saying it's going to go there. I'm just pointing out that we've got symmetrical trend lines there, and that's currently holding up as a strongest form of support. If we break underneath there, then basically all bets are off, and maybe we can see a move down to 12,000, then maybe a bounce, and maybe even a move down to 5, which I'm not expecting, but I'm just showing you what the trend lines are kind of saying. So overall, hoping for a big move down towards the 12,000 level at some point, and then that'll be a decent looking trade. Cannot discount a rally from current levels. If we start to see maybe 20,500 hit, and then a daily price close above the top of the range, drop below 18,100 could cause a significant decline in the market, and bulls could target that. I would say 21.7 is probably the highest that I've got the market going at the moment, and I will say that the long to short ratio is very low, so there's a strong chance at some point we could get some type of rebound based on that data alone that's been working quite well this year. If you look at Ethereum, it's a similar sort of story. We just started to break underneath this triangle. We've had no buying interest above the key number 1,420, former all-time high, and a big pivot for the market. So basically breaking underneath this trend line and this triangle, and if that plays out, then we can probably see a move down to about 1,000 US dollars. And you can see again exactly the same as Bitcoin. Lower time frames are mimicking the higher time frames in terms of the triangle pattern breakout, and we're consolidating underneath that breakout, even on the lower time frame. So maybe we'll move down to there, and again another head and shoulders pattern looks to be setting up. So pretty boring and standard stuff, and the Fibonacci retracement again is not very exciting and is not very tradable at the moment. And we've already tested the 0.78.6, and there's a chance we're going to have an even bigger decline at some point towards $500. So overall this chart is bearish. It's not working at the moment, and the risk is that we're going to see a very, very large multi-year head and shoulders pattern playing up on there. So that would be the risk at the moment, that we move down to there and maybe even lower. So keep your eye on that. But this sequence isn't working for bulls, so we know we're in a full-on bear market. So overall, Ethereum could be in for a big decline if it stays below 1,420 lower time frames, copying higher time frames. A decline to $1,000 is possible, if not getting above the 142 level very soon. 1,000 still remains more likely than 2,500 for me.
And Thank you. I hope you found my thoughts helpful. If you'd like more, please click the subscribe button for Pro BTC Trader and join me every week on Wednesdays for our live trading war room and daily email updates.